Hey guys, thanks for joining us. So part of the title of the panel is the future of everything, which we are absolutely going to cover in 25 minutes. So I think one thing, and we'll move on to sort of more focused topics in a bit, but I think when you have a conversation about Bitcoin and the blockchain and cryptocurrencies, one of the things you kind of have, the elephant room, at least for me, as somebody getting a million emails about this, is just hype, right? And I'm sure as investors, this is something that you see yourself, or executives in the space. So just, if you could distill it down, like what percentage of the current excitement around Bitcoin and blockchain is based on real promise versus empty hype?
What are you talking about? Why are you getting million emails? I'm not getting them.
Percentage-wise. How much percentage? I mean, it depends what sort of we're talking about. Percentage of the activity, or percentage of the ICOs, or percentage of the. I would say in terms. I mean, it's hard to know, right? It's really hard to know. There's such a ridiculous volume of stuff going on.
Or maybe another way to approach it is to what extent should somebody looking at investing in the space or starting a company in the space be worried about the extent of the hype?
I think they should probably be quite worried about the extent of the hype. I think, look, I mean, the reality is there's a few issues going on. I'll give my version of trying to break that down. But when we're talking, with a blockchain and Ethereum, et cetera, there are a handful of people who understand some of the really core technical challenges that are being solved. And then a lot of other people who are still kind of very close to it are just relying on the best assessment from those handful of people. And then you've got the vast bulk of people who are starting to get involved, who are all relying on second, third, fourth, fifth-hand information. So that's one of the biggest challenges that we face. This is, we're moving into this world of in math we trust. There's literally, you can count on one hand the number of people who really understand the math. And so everybody else is relying on sounds sensible, and people who are credible tell me that it works, right? So there's a level of that going on. That's probably an overstatement. But there's a level of that going on, particularly because of the volume. So I think even the people who do get the maths have trouble staying across the volume of different activity that's going on. But I think what you could say about it is that there are some very known challenges that people are working on trying to solve around blockchain. And there's every reason to believe, if you look at historical technology trends, that they're probably going to solve these challenges. And as they do solve these challenges, this stuff starts to become more and more able to be a mainstream technology that we can all start to build real applications on.
I think for me, maths is a secondary problem. The first problem is having cryptocurrency and blockchain and treat them differently. There is a technology platform, and then there is a transaction way of dealing with that technology platform. What's happening is I think what you are referring to, which we call it inside ConsenSys token fevers, is trying to raise money, irrespective whether that way or that particular application makes sense or blockchain or not. We come across 80% to 85% of the companies we come across, they have no usage or understanding or need for blockchain in what they are trying to do, but they just want ERC20 tokens to be out there to raise money. And then we have really, really deep researched companies who actually going to use blockchain and take that particular gap or the need to a really big solution, and they don't even want to do token because it doesn't make sense for them. So I think as a first step, what we need to do is to differentiate between the technology and the cryptocurrency, and then go whether there's a utilization, whether the tokens are actually needed to solve this purpose, or it is just a way of fundraising, and then take it deeper into different way. Even if it's just a way of fundraising, is it actually going to help the overall blockchain ecosystem? Then how do we work with that? So I think if we go step by step and break it down, out of your 1 million emails, you will come down to 10 or 20, which is really worth you paying attention to.
Go ahead.
I think it's quite similar to what we saw with .com, but there's far more risk and potential for perversity, because
that sounds good.
At least with .com, there were regulations in terms of companies listing and disclosure requirements, and not to say that they weren't taken advantage of, and that the companies didn't necessarily have an underlying business model that was validated or had the potential to be mainstreamed. But I think the lack of regulation means that although, as Simon said, that there are companies working on solving real world problems, the amount of companies that are, as Kavita said, just trying to retrofit, the blockchain to raise capital versus those that maybe have an idea but, haven't validated it through a financial market, in the way that many would, having had their idea stress tested by VCs or customers, that they're pre-funding everything up front. So I do think we're going to see a correction in the market. It's an inevitability. And I think it's a problem for the really good quality companies that are trying to do something and have put a lot of thought into it and have a bona fide reason to be using the blockchain. But in terms of when that consolidation or reform will happen, I think we're a way away from that, unfortunately.
Yeah. Excuse me. Well, so there's a whole bunch of points in there that I do want to get to, but since we're talking also about companies that are actually doing something interesting with the technology, Jemma, do you want to just talk a little bit about what Power Ledger does?
Sure. We are a startup. We formed the company in May last year, and we use the blockchain to trade electricity peer-to-peer. And so if you've got solar panels on your roof, you can sell that surplus electricity to your neighbour. We also do peer-to-peer trading within buildings. So like an apartment building could build a solar and battery microgrid and do trading within the building. And we have another product which is around, we call it asset germination, and it's fractionalised ownership of renewable energy assets. So it's tokenizing the asset and allowing people to purchase small chunks of a solar farm or a battery for that matter.
So how technologically savvy do you have to be actually be participating in the system?
Actually, not at all. The customer doesn't see the blockchain or really. There's a token for electricity which is called a spark, but that's not exposed to any cryptocurrency fluctuation. 1 spark is always 1 cent. It's like a phone minute for electricity, and so the customer just sees exactly what they would do if they were, purchasing phone minutes. In terms of the application hosts, they will interface with the cryptocurrency market via the power token which we've created, which is a license to trade peer-to-peer. And an application host is a utility, so an energy retailer or a network operator that wants to allow their customers to trade peer-to-peer. So they will have to have a greater level of sophistication and awareness of the cryptocurrency market.
Right. So I think one of the elements of that is that from a consumer perspective, the fact that you're using blockchain technology is almost completely invisible, and that's not the selling point.
Correct. Yes.
Well, I guess maybe this would be a good opportunity just to go down and talk a little bit about each of your sort of connection to blockchain. Kavita, do you want to just talk a little bit about, you joined ConsenSys relatively recently to be investing in this space. Well, first of all, what was it that was interesting to you about moving into this space?
2 factors. The official story is I love blockchain. Okay. No, jokes apart. I think I have been seeing the evolution of blockchain last 1.5 years. My first connection came when at one of the MIT Solve event, there is this company which was using identity platform for the refugees. And I just couldn't understand because I was like, how is this transparency gonna go and everything? And I'm very thankful for the founders to actually educate me afterwards, and that was my first foray to understand how blockchain is. And they actually they are really working with UNHCR at the refugees entry in Turkey and Greece on the project. And then I started following it, and I got superly lucky to meet Joseph Lubin in one of the events and have 4-hour continuous conversation with him, which just made me a convert overnight. And I realized that a lot of gaps and inefficiencies and redundancies in the system, if we can keep on creating a better version of the current system, or we can literally move them on blockchain with the added benefits of transparency, sourceability, traceability, and especially I think what hit very close to home was how the fintech revolution, which I saw in 2006 happening in Africa, how the technology changed the way for the remittance money or the transactional, both the timing and the percentage. If I compare the same thing with blockchain and add another layer of transparency with identity, I just felt like this is what's going to be the next level solution for a lot of projects.
Right. And so you guys are going to be both investing in the form of just writing a check for equity, but also buying tokens.
Yes, so it is also a new way of investing with the new way of technology. So it's a VC hedge fund. We do pre-seed and seed stage equity, and then we also do token investments in it, but it's all about long term. We want to be strategic player with the ConsenSys brand. If we see that we can actually take this company, whether it's from the technology side or it's from the ecosystem perspective, and take it to the next level internationally, or this is the problem in the long term, which is what a lot of blockchain companies gonna feel, and this is the solution, then that's what we do. So for an example, Origin is a protocol which is decentralized every application from the way current Airbnb to Uber, how you use it, and take the middleman out. So from that protocol layer to a company which is doing land titling on blockchain to crypto lending platform like BlockFi. So we are going from all the way from applications to security to protocol to create that whole ecosystem.
So just to connect that to Reinventure, Simon, I mean, would you be willing to invest in the form of just buying tokens?
Well, we can't legally buy tokens. So that's a problem. That's probably, I don't know, maybe less of a problem for some of the US funds, but a lot of the US funds are also investing through a fund of funds. Because you get a couple of problems with this. One of them is, from our point of view, the legal one. So we operate under an Australian piece of legislation that most of the VC funds in this market operate under, and it only enables us to invest in securities. But then beyond that, we also, when we're thinking about if we were to invest in this space, obviously we've got the fact of how do we think about the valuations with some of these companies when they're just, and the amounts they're raising, right, which are orders of magnitude beyond the sort of levels that most VCs are used to operating at that maturity of company. So that's something we're all having to get our heads around collectively. And then there's also just the notion of the volume of activity in the space is such that being a non-specialist in blockchain is actually kind of tricky at the moment, because there's literally, if you speak to some of the blockchain-focused funds, they're getting 10 deals a day, right? And they're having to go through all of that, and they've got these systems in place to try and deal with this type of volume. And we're looking across a sort of broader fintech market. So we have to come at it slightly differently. So, we're definitely contemplating that notion of, do we invest via a fund of funds into a blockchain specialist fund as one possibility. So we're looking at a range of different ways of how we think about this.
Feel free to follow us.
Yeah, there you go. Just
there we go.
Follow their lead. Just write another
check. The deal's cut. Exactly.
So do you also think that, I mean, we should say that you have, I believe, one, if we were talking about cryptocurrencies, you have basically one, or
yeah, so we've invested in Coinbase, which is obviously done extremely well, or doing extremely well at the moment. It's probably the fastest growing financial services company on the planet at the moment. Yeah, and that's given us a window into some of what's going on in that world, but we've also spent a lot of time, increasing amount of time, sort of specifically looking at blockchain-related investments. But again, our fund, and this is another factor of the Australian funds, is that the legislation means that you can only invest 20% of your funds offshore. So we're just looking at the Australian market, and it's still early days for a lot of Australian blockchain ventures. So yeah, it's an interesting exercise.
I guess part of what I also wonder is if, as a fintech-focused firm, that over time, those investments may not be pure blockchain or crypto investments, but the technology is going to be more involved across your portfolio. Yeah.
Well, I mean, I think that's right. So if you look, there's a bunch of companies that are kind of doing blockchain at the moment, and actually V1 is non-blockchain. V1 is, we're going to build a platform just using traditional technologies, traditional payment rails, traditional databases, and then we're going to look to re-engineer it over time into blockchain, and that will give us, a bunch of different qualities which will be useful over time. One might be that a developer ecosystem can build on top of whatever kind of protocol or what have you that we create. But there may be other advantages that come with it as well. So I think increasingly it will start to blend back into the mainstream of investing, absolutely.
So we've also touched on a little bit the regulatory landscape, and obviously that also is going to change from country to country. But I mean, how much regulation do you think, just broadly speaking, we're going to see, coming down in the next couple of years?
I'm actually waiting for a lot of regulations to happen, because that also gives us a very safe environment to really play and be sure of the things we want to do. Right now, there's so much speculation around what could happen, what could not, like the type of tokens you can launch in the market, the valuations, the caps, what sort of jurisdiction do you have to play when you are, like for a crypto lending platform, which we are doing. Even within US states, we have to go state by state of different jurisdiction by the state level. Then if we want to take it internationally, what sort of tokens can we launch? So I think token launches and blockchain is here to stay. The earlier the government are going to come in the picture and figure out their own role play, then the people started lobbying for it and then tell them this is how we do, the earlier this market is going to go mature. And I think Europe is way ahead of US or any other countries right now, as much as my understanding. And things which are coming from Switzerland or Germany, these guys on the regulation side are working more with the new technologies so that the local ecosystem or the countries can be way ahead in the innovation stage. So if everything goes fine, I think most of the security tokens are going to get routed through Switzerland or Germany way earlier than it would ever be done in US.
Simon and Jemma, you agree? Sounds like. Looks like you're nodding along,
Well,
Jemma.
yeah, I mean, I think that there's a few different, because regulation, I mean, you've got regulation of tokens, and then you've got regulation of, you know, sort of cryptocurrencies and all of,
Right, I guess
like, so
maybe that's the
regulators are
ICOs
grappling with all of that.
Yeah.
The Australian government has made a bunch of reforms to try and make cryptocurrencies more sort of amenable, usable, et cetera, and I think that stuff is all good. Definitely, as far as the ICOs are concerned, you know, obviously Zug is becoming this kind of hub of
Crypto
activity
Valley.
because it's created a friendly regulatory environment. I think that countries do need to move. I mean, the other thing I would say is you've also see the activity going on in places like China, which has obviously had at times quite a flip approach to how it thinks about these things. But, you know, China has a level of activity going on in terms of, for example, just permissioned blockchains with known sets of validators, etc. A level of activity that I think is going on anywhere else on the planet. I mean, they have built these blockchains that are dealing with billions of dollars of value already, you know, doing syndicated loans. WeBank's got a blockchain doing syndicated loans, et cetera. So, you know, I think we're likely to see a kind of disruption here, potentially, which I think we'd actually likely to see two waves of disruption, and one of them's very much kind of upon us, to be honest, which is just general payment system. We're seeing that with Tencent and Alibaba, right? Where they've got this entirely next generation payment system clean, and they've sort of going out through the rest of the developing world, and once they've soaken up the growth there, they'll probably head out to the Western world. I think we're going to see that in blockchain in relation, and it's solving a bunch of problems, just like in China, those payment systems were solving the fact there was a largely cash economy. In blockchain, in places like China, the trust between suppliers, the trust in supply chains is very low. And I think it creates, again, this incredible environment for the seeding of blockchains. And I think we're likely to see a lot of these things take root in developing countries and then hit the West like a tsunami. And by the time they do hit the West, the technology will be incredibly well developed, efficient, highly functionally rich. And that's, I think, the risk for a lot of Western countries.
But I think moving back to the regulation side with Russia launching its own cryptocurrency, right? And even though ICOs are banned in China and South Korea, but they are going towards the cryptocurrency. And China, as you said, the whole government has created their own private ledger system. But at the same time, you cannot really launch ICOs. So it's actually, even we are waiting and watching like how individual countries are going to come up with the regulation. But that is going to be definitely a game changing for this technology.
Yeah, I think that also when we did Power Ledger's initial coin offering, we were obviously looking at where we could do it legally, and countries like Singapore and Germany and Switzerland were on the places where many companies were looking to. But we ended up working with Alan's Linklaters here to see if it could be done legally in Australia, and if so, how, and whether our token under Australian law would be characterised as a security. The Power token is actually a license and a bond, and so we were comfortable that we weren't going to be getting into securities law, at least in Australia. And it was also not considered to be a financial product, but we decided to do our documentation to the standard of a financial product and debut in the market basically to that standard. But in terms of the regulation, when you're selling an ICO, it's not just the country of origin, it's the countries you're selling into.
Yeah.
And so you're seeing a lot of companies that are doing ICOs geo-blocking the countries that are restricted or making buyers confirm that they're not from a certain country. But I think that the marketplace is so huge, I don't think that any one country or even a bunch of them is actually going to have that material and impact overall on the marketplace. You'll find ways that it's a distributed system, and so it's kind of almost countercultural to be able to shut it down. But in terms of regulation moving forward, up until now, most of the token designs are all about trying to avoid it being a security. And so everyone wants to be a utility token, and they're trying to find a way to design it. But personally, I think the next frontier will be tokens that are securities, and the companies will be solving that problem because there's so much potential to monetize that. And as you mentioned, in the US, you have to solve it for every state. I mean, it's not an impossible task to do, but and I think that there'll be a few pioneers that will solve the problem, and the floodgates will open thereafter.
But I think I want to underline what you said, which is a chicken and egg situation. Out here is like the countries wants to ban it because they don't want their citizens to do it, but then the same citizens go to different countries, register a bank account, and still do it. So if you think that this is this type of currency is actually increasing a sort of black money, you're actually also being a proponent for doing the same thing.
Yes.
Yeah.
Sure.
I mean, I'd also think, to be honest, I'm not sure how quickly people will go towards securities, because actually the reality is everyone's looking at the black letter and people are just swimming around the black letter.
But that's the future.
At a level. Of course it is.
Yeah.
And I think that the reality is that, I mean, you can look at a bunch of stock markets and say there's a whole bunch of that regulation that does very little to protect investors. You get insiders in stock markets who pump stocks up, get out, leave retail investors kind of carrying the can. That happens all the time in our current stock markets. So, I think what is likely to protect retail investors in this kind of space is not necessarily more regulation, but market type infrastructure. Things, for example, like Angel List in the security space is a way in which you get sort of insiders who have credibility, who are taking an early position in something and saying, I'm prepared to put my reputation on this, that this one is actually a good thing. And I'm actually prepared to watch it closely enough that we can make sure that the founders aren't just living on a beach in the Bahamas or something like that. So, that's actually what's going to protect retail investors is some of that market infrastructure that develops, to my mind, much more than a prospectus regulation, which, I mean, you can put any rubbish into it's not quite like that, but it doesn't give you the protection.
But that's what we are doing with like pre-sale investments into tokens,
exactly.
by
So
saying that's our diligence, right? If you are walking into it, you know that a brand like this has done the diligence and putting our branding on top of it.
Yeah.
All right, so unfortunately we are pretty much out of time, and we've just barely scratched the surface of the future of everything. But luckily, we are having a breakout session in the breakout room where you'll be able to talk to our fine panelists one-on-one. You can also yell at me if you want. So yeah, we're going to go do that right now. So thanks for joining us.
Thank you.
Thank you.